folks, welcome back to the Mortgage Update with Dan Frio, and I am Dan Frio. Today is October 14th, and sorry I was AWOL for a couple days. Just was busy, and the market was getting clobbered, and I'm going to show you that in a minute. And we're going to also go over what's happening and what happened to the markets, and then why I think we're going to see a slight reversal here in the next few days. So please don't forget to give me a thumbs up. Please comment down below so I respond to each one of the comments. So I'd love to hear from you to just let me know if there's any sections you want me to go over in detail. But again, if you're new to the channel, my name is Dan Frio. I do the mortgage update. I try to do it every day. I'm a mortgage lender. I can work most of the country. There's a couple states that we are not in, but I can help people throughout the country. Been doing this for 30 years. I'm in Chicago. I have two radio shows that I do. One is nightly from 7:30 to 8 on WYLL. That's in Chicago. And then I also have a show on WIND in Chicago on Saturdays from 7 to 8 a.m. So let's get at it. Oh, I want to give a giveaway. So come back every day and check and see if I'm doing anything. But I'm going to give earbuds away for anybody that subscribes, shares, and comments down below. And then at the end of the month, I'm going to pick actually two winners on this video alone. And those winners I'll post on November 1st, who the winners are. I'll put in the comment section of this video. So make sure you keep coming back to this particular video as well. And then the post I do on November 1st, please mark your calendars and make sure you check that one out. And I'll be picking two winners actually live while we're doing that. So if you're on there, I'll be shipping you out some earbuds. They're really nice. They're in a case. They're the white ones that you plug in. You put them in both ears, and you can use them for your phone and all kind of other stuff. So let's get at it. So today the markets were closed for mortgage-backed securities. So we are going to see a big zero here. But let me show you what happened last week. We got pummeled. So again, if you follow the channel, you know what's going on. But if you don't, this is the mortgage-backed securities. This is an instrument that actually dictates or is the instrument that creates mortgage rates. Okay? So when this is the price of those particular bonds, they're called mortgage-backed securities. As the bond prices go up, rates come down. And as the prices go down, rates go up. And you see that we saw a dramatic change here. Okay, what happened? Well, let's go through. What I'll preface this at is when the markets or the world are in a good position, meaning the economy is going good, there's really no bad news out there. That's great for the economy. It's great for the stock market. Well, the stock market, you got to look at it. When you're looking at investments, there's two tools. There's stocks and bonds. So when the markets or the economy and the world's doing really good, really safe, and everything's kind of plugging along, people load up on stocks, driving up stock prices. Okay, what happens is when there's uncertainty in the world, in the economy, especially in the U.S. economy, uncertainty causes fear in the markets, and then you'll hear a phrase: people will flee to safety. Safety, in essence, are bonds, and that's one piece. Mortgage-backed securities are bonds that people push their money into. So the economy is doing very well. You're buying stocks, pulling money out of bonds. If the economy if there's some hiccups in the economy or in the world, people will flee to safety, so they'll sell their stocks and start pushing back into bonds. So my prediction for this past week, all these are predictions because with today's world, a simple tweet can cause havoc in the markets, stock markets, bond markets, and throughout the world. So let me tell you why I think things are going to get a little bit better. We're going to see a reversal and start testing these limits up here. So again, we hit, there's these charts that we watch daily. They're the Fibonacci levels and other levels. Fibonacci levels are basically two lines that are created, and this is all mathematics, and there's a floor and a ceiling. And you'll notice we usually teeter between those, and we do a lot. If you go through here, we deviate a little bit there, but that's about it. So then you see these other lines. These are moving averages. 50-day moving average, 25-day moving average, and so forth. So these play big roles as well. So last week we tested the high end or the ceiling of the Fibonacci levels right here. And we hit. You can see we hit. And then we start coming down. Okay, so what happened? What happened is if you go back to last Thursday, the markets said, or the news came out that Trump and China reached a deal. Okay, and if you go back to some of the news back, a couple months ago, everybody was making fun of Trump, saying when he said, if I made a deal, the stock market's going to go up, 10,000 points. Well, that's an exaggeration, but what he's saying is, if I can make a deal with China, that's great news for U.S., China, and almost the world, believe it or not. Okay, so when that came out and they said they kind of reached a trade deal, stocks jumped and mortgage-backed securities plummeted. So as these prices went down, we saw a big increase in interest rates. We probably saw about a 2 to a 0.3 adjustment, 0.3% to interest rates on just Thursday and Friday alone. Okay, that's a huge move in today's markets. Okay, so now let's get to why I think we've hit this bottom. I don't think we're going to go any lower. Here's why. Again, when we watch the markets and the markets have uncertainty, that'll help bonds. So let's go to see what's happening. The Dow Jones, here's what happened in the Dow today. But I want to go over to stock news. You're going to see here the Dow fell 29 points, but the big news is right down here. You're going to see stocks close slightly lower as U.S.-China trade deals draw skepticism. So, what's the skepticism? So if you do some more research, and this is what I do for you, you're going to see a lot of what the trade deal, what they came out and said, they reached a trade agreement. They really didn't. They basically came back and said that they did reach some common ground on certain areas, but these are the same certain areas that they've been at for months. But what it did do is it halted some of the additional tariffs that Trump's putting on China in the next month. But you hear it here is why Trump's new trade deal is being hated by Wall Street. Well, the good news is when they hate it, they have skepticism on it. And so if you read down through here, dumping stocks, again, when they dump stocks, what do? Where do they put that money? Well, they put it back into mortgage-backed securities. Thus, when you pump money in here, you're driving up the price of the bonds, thus driving the yields down. Okay, so one, we have the China deal isn't as great as it appeared to be at face value on Thursday. The next thing we have is the Brexit. Brexit's another area that's coming up. And you might be familiar or unfamiliar with these things, but this is, uncertainty in the world. Uncertainty is bad for stocks, and it's great for interest rates or mortgage-backed securities. So Brexit is coming up here soon, and we're going to have some information on that. Then we go to Turkey is bombing Syria. More uncertainty in the markets. So again, uncertainty drives money into bonds that are coming out of stocks. So what I'm predicting is that we're going to see this flattening and actually turn about, because once all this news about China and everything else starts to settle, I don't think it's as great a news as everybody expected Thursday and Friday of last week. So you're going to see this stagnate and actually rates come a little bit better. I can be wrong. That's why I, as your mortgage advisor, if I'm working with you, I'm at my computer all day, every day. I'm monitoring this. So if I see a big spike down like this in rate, or a move down in this, spiking interest rates, I'm locking you. And I locked a ton of clients. I probably locked close to $4 or $5 million in these days alone. And I saved my clients, probably 0.3%, so 0.375. Just think if it's a $200,000-$300,000 loan, that might be $150 a month, $200 a month, 200 times 360 payments. It's a lot of money. So that's what I do for you. This is just one of the things that I do, along with putting you into the correct programs. I have almost all the programs available to us. I can help you with all those and kind of walk you through. I pride myself on walking you through every step of the way, telling you why it's done, why it's needed, why it's necessary, and and also tell you what program you would fit into, what, why, where, and when, and how. And I answer all your questions so you know what the next step is, and trying to give you a little bit of trying to reduce the anxiety that you might have, especially if you're buying your first home. So again, my name is Dan Frio, the Mortgage Update. Thank you so much for watching. The market was off today. This was a kind of a lengthy video. I usually don't do them this long, but I just wanted to tell you what what happened last week and what my predictions are for this week. So hope you like it. Please don't forget to give me a thumbs up, subscribe down below, click that bell, and also don't forget, you got to share this, comment, like, do whatever you can to this video, because on this video alone, I'm going to pick 2 winners to win earbuds on November 1st. So take care. If I can be of any help to you, please reach out to me at 844-775-LOAN. That's 5626. Or you can reach me at dfrio, which is FRIO, at parksidelending.com. Thanks again. Take care. God bless. I will see you tomorrow.